Well, hey, YouTube. Hey, X. How's everybody doing? Thank you for being here. I'm trying out the new two-monitor setup, so um, who knows if I'll be able to figure out how to work it. Anyway, TGIF, right? TGIF. Let me get a little caffeine drink going here. See what's up. All right, let's check the market, see if I can figure this out. So I want to share that window, and I want to share, I guess, this over here. I'll get the hang of this maybe someday. Who knows? All right. Well, I didn't want to share my emails necessarily, but whatever. All right. That's so weird not to see the comments over here. Hey, Dividend Degenerate. Hey, Mark. Appreciate you guys being here. All right. So we rallied right up into this area that they sold the other day, kind of after the NVIDIA news petered out. Anyway, and so far today, there were sellers there again. So that I guess it's a step in the right direction, though. At least we're up. My account was up today for the first time all week. You can see on the SPY, kind of also looks like the previous POC, check the old previous point of control, got ahead of ourselves, check the point of control. This usually resolves in the direction of the trend. In my opinion, nothing's really changed. The NVIDIA earnings basically checked that previous POC. This previous POC was checked right here. So anyway, still bearish order flow, but it's one step at a time. Like I said, at least I had a green day today. So I just do that. If I do that, then that happens. Okay, this is pretty cool. Huh. All right. This new technology. This is awesome. All right, let's see what else is up. Let's look at Bitcoin. It's the same old problem. Bitcoin sold off again today, bounced, but I mean, it didn't really make much progress. Let's take a look at this. All my Bitcoin related stuff was still down. I'm going to let Jax out. But I think Jackson, what's the matter with you? Are you okay, buddy? Do you want a treat? Who wants a treat? You got to come up here and make an appearance. Jackson. It's right here. What a good boy. Okay. All right. Yeah, I mean, it's making progress, but come on, we have to do better than this. The first step would be to get back inside this yellow area. Anyway, one step at a time. So let's see what else I have for you guys. My own portfolio, cash is 18.5%. YQQ's 13.8%, and it was actually up today. Good job. Look at this. YQQ and ULTY, we're up at the same time. That's awesome. I'll let Jax out. Jackson, come here. That's awesome. We'll take that. We will definitely take that. And then K yield was up a little bit, blocks down. Bitcoin's still down, so Salty was actually off 4/10. QLDY was up 0.5%. WPay, great job, WPay. WPay, QLDY, ULTY, and K yield. NYQQ were my winners, and then BITK still killing me. Got to have Bitcoin turn around. What's going on with gold and silver? These things have been soft lately, also. All right, so let's look at this. This is based on end of the day data. So this is the daily change of all these funds I like to follow. ULTI won the day today, up 2.8. Chippy up 1.7. Triple Q's up 1.3. SPY up 1.3. K yield up 1.3. QLDY 1.1. This was about 20 minutes before the close. It's ULTI and blocks. I mean, Anyway, let's look at the cumulative total return. So ULTI is still down. So's blocks. So's LFGY, and so's some of them are improving though a little bit. Not ULTI and blocks, but these all improved. K yield and WPay, the ones that are up today improved a little bit, but they're still well underwater compared to the benchmark. Far from being out of the woods. The good news is on the dividend yield, though, getting a good dividend from ULTY. That's kind of what they do. Same thing with LFGY. WPay is good too. Blocks and the rest of them. Surprised ULTIs didn't go up. They just paid a new dividend. They paid 35 the first time, and they paid. I guess we can look at that. But it's not on the screen. See, this is going to be a problem. I'm never going to figure this out because I have like 3 freaking profiles going. Gosh darn it. You got to be kidding me. I need to put everything on the same Chrome account. Anyway, whatever. I'm just not even going to look at it then. Anyway, all I was going to show is I was going to show the dividend. I think it was 27 cents. The first one was 35 cents. You can see right here, look at the purple line. That's ULTY. It's turned up, because it made up some ground today, as did, I don't know about LFGY, but the other ones did too. WPay turning up. Going to start a new trend going up. Maybe I can do 2. Can I share another screen? No. This is a pain. I got to go stop screen, and then I have to go share screen, and then I have to go find. Why can't I just hit entire screen? I like to do that. Oh, I see. I can do entire screen. I mean, this entire screen. Oh, okay. Now I'm liking it a little bit better. All right. So this is what I was going to show you guys. Let's take a look at this. I just wanted to make sure I got the dividend. Yeah. So there's ULTI. They went X, I think, last Thursday for 35 cents, and then this Thursday for 27 cents. But even when you factor that in, their dividends were trailing some of the other ones. Let's look at this chart. So I like to look at the day just kind of as a whole thing. So this is definitely an improvement over yesterday, of course. It looks about like Wednesday, so different leadership. I mean, it looks similar to this day also. Anyway, hopefully we'll stay bounced. Let's check out the old index buffer. Nope, no feed and 5e doctrine today. That's good. Look at old feet. Did feet actually, was it up today? A little bit. We'll take it. Q up was down. V yield was down. This thing shorts volatility, or is V yield short volatility or V yield's long volatility? It must be long volatility because volatility came in quite a bit today. Yeah, volatility was down 11% today. Yeah, so V yield is long volatility. It's like UVIX. I mean, I don't know if it's exactly like it, but Anyway, hopefully this will keep falling next week. There's something about if it goes over 35 and then comes back under 30 or something, it never really didn't get to 35. Hopefully this was yesterday was enough of a reset to reset the market. The other thing is it was OPEX today. Sometimes OPEX ends a trend, and the trend the past 2-3 weeks has been down in the indexes. Maybe, and today we got an update. Maybe that because everyone resets their hedges and everything, and it resets the positioning and the gamma and everything. So sometimes OPEX will change the trend also. So we can always help on that. Jackson, what are you doing? Hang on a second. I'm going to shut the door. Okay. All right. So what else do we need to talk about? I got invited to Costa Rica by the guys at Quantify. They're the ones that have BTGD. It's right over Christmas. I'm not going to be able to make it. But the good news is I talked to David, the founder, and I think he's going to come on the channel very soon. I told him we'd love to have him on the channel, that you guys like. Some of you guys like BTGD, but I really want to get him on to talk about these income blast products. And I think they come out in December. Maybe I should wait and have them on the day they come out, or right around that time, so we can actually talk about them. But anyway, that's good. I always like to have managers on the station. He's a nice guy. I talked to him on the phone a couple of weeks ago, and we had a nice conversation. I like him. All right. So what else? What do you guys want to talk about? What's going on? I see Ofer's in the house. Ofer's got a question. I'll put it up on the screen. Okay. Hey, Max, I just saw a video by Brad claiming holding funds like EGGS and KQQQ have puts on mags in them or similar. They could be used. Yeah, I've always heard EGGS has puts. KQQQ. Well, and Howard does any. He's liable to do anything. I wouldn't be surprised if I don't think he systematically has puts, but he can do anything. So I wouldn't be surprised if he had puts this week. And maybe he systematically uses them, but let's look into that. That's a great point, Ofer. That is a great point. Let's see kind of how they held up lately. EGGS, and let's just run it against the SPY and just see how it held up the past quarter. See how much downside we caught here. That's a little bit more than a quarter, but whatever. Oh, well, that's a lot more than a quarter right there. Let me get a quarter in here. All right, so EGGS and SPY. Well, they sold off a little bit more than SPY, but yeah, they definitely have puts. Lots of funds have puts. GPTY oftentimes will have a put hedge on the entire Qs. They'll run a put spread on the Qs. They had that going in April, and it helped them out. I guess what's it called? The guy Will Rind. What's the name of his company? What's that called? Granite Shares. Those guys run callers. ULTY runs callers. So callers means you have puts, downside put protection. So a lot of funds have that, and the ones that I like, I really like GPTY, as you know. I really like ULTY. I really like, and I really liked YSPY. YSPY did all right for me. So yeah, no, that's a good feature. I've just never bought eggs yet. But yeah, that's definitely a good feature. The ones that don't have any downside mitigation are blocks and QLDY, frankly. But blocks is different. Blocks is more about the upside, and really ULTI, it has mitigation sometimes and it doesn't sometimes. This week they put on the puts, so this week they run callers too. But yeah, I think that's a sign of a good fund. Like our friend Mark always says, the first job one of being a trader is protecting your capital, and I agree with that. So what are you saying here, Bikerman? K-Silk payout was great the other day. Well, cool. That's what it's all about. That is what it's all about. I was just disappointed when the market was pulling back. The gold and silver were pulling back also. Sometimes they run inverse of the market, but no, gold's already so high, it probably needed to pull back. All right, Norman's here from the West Coast. Happy Friday, Norman. So still raining out there? I know last week it was raining a bunch. You guys had a massive rainstorm, and I heard there was another one behind it, but that's been about a week. So Mayor says, exactly, I don't see the hedging effect in the chart. It neither of them, yeah. Well, some people, sometimes some funds will have hedges on, but it's more for just a disaster. It's not just like, it's not going to, the market was only down 5 or 7%. The stuff that eggs trades, eggs is based on S&P. S&P really isn't down that much. It could be a lot worse. But no, I hear you. But no, they do have some type of protection. I've seen Brad say that, and then when I reviewed them, they had that. I mean, that's a true deal as well. Hey, BR, what are you doing? Thank you for being here, bud. All right, Bikerman bought some gold and silver at the top. Glad to get some buying opportunities. Yeah, I bought gold and I bought K gold and K silver at the top. But the good thing was I rode GDXY up and a lot and sold it and just redeployed it into K gold and K silver. I haven't done well in K gold and K silver yet, but I'm well ahead on the gold trade thanks to GDXY. Hey, Sauls, what are you doing here, bud? Yeah, TGIF, you got some more SPY. SPY is a good one. SPY is a good one. I was tempted to buy the dip today, but I'm going to hold off a little bit longer. I'm not convinced it's over. I'm not convinced it's over. And I mean, maybe the dip's over in the SPY or whatever. So you're probably fine on SPY, but all the stuff I have is blocks and the higher beta stuff, and I'm not convinced that's over yet. So in any event, on and off, okay. Norman says it's on and off. You got a lot of GDXW, and it's outperforming GDX last time you looked. That's awesome. That's awesome. GDXW wasn't available at the time I got GDXY, or I may have got it. GDXW, I think, has been around for maybe 2 months or a month or something. And I got GDXY in April, or I think in March. When I saw the market was going down, I wanted to get some hedges. So I took off some other stuff, and I took off Mister and put on GDXY and some inverses. Anyway, GDXY did really well for me. That's really good. 650 for the SPY looked like a good support for me. Yeah, well, heck yes. The SPY probably in good shape. The markets, I mean, when I'm worried about blocks, blocks and BITK is killing me. Believe me, and I think it's too late to sell, and I'm tempted to buy the dip in both of those just because it's pretty low. But let's get on the Bitcoin chart. Let's look at a daily Bitcoin chart. I mean, hopefully we're close. Maybe we're already there. I mean, we did have a huge rejection tail. It hit 80. Maybe that was the level it needed. Maybe people thought it was going to 77, but they front run it. So it'll go up and then it'll come down and make a higher low. There'll be other chances for me to get BITK at a cheaper price or whatever else. If I want to have blocks or something at a cheaper price. But this thing's off like 35%. It's, so yeah, it's probably pretty close to low. Do I ever look at what? Bonds, senior loans, or just that? Well, I mean, I'm aware of them. They're in the max factor. I think SRLN, Sirloin, is in the max factor. Senior. I mean, they're in there for kind of comparison, but no, I mainly look at options. Do you have some of those senior loan things? And on bonds, yes, all the time. I used to have TLTW and actually did well in it, but I sold all of it. I sold all the ones that did well, and I bought the stuff that's going down now. I was up like 13% and tried to protect profits. I did a good job, but except then I bought stuff that, anyway, whatever. It'll come back. But yeah, I'm into bonds are awesome. I'm into bonds, auto callables especially. Yeah, they did VR. We talked about that on the night show last night. I believe it was based. Also, the Innovator released some auto callables that are based on single stocks. That are. I think we talked about that on the night show last night. But yeah, those auto callables are cool, and they're right up. I mean, they're similar to Barrier Fund, and I know that I think you like that Barrier Fund, Brad. So anyway, hey Froggy, BTC, will it be too late to catch? Well, I'm not trying to catch the exact bottom. I mean, it will be too late to catch the bottom. Yeah, I mean, I'm just I'd rather not catch the exact bottom than buy too early. See, here's what I did last time. I bought BITK right here, like at 105 when I hit the trend line. Anyway, I'd probably do it again. I mean, I can't predict the future, but I kind of, shot my load right there. I mean, so yeah, so even if I get it at 90 or something, I'll look for about, even if I get it at 90, that'll still be a nice lower price. And if we, some people say people that are big into Bitcoin say we're going to 125, 130,000 by the end of the year or something. If we do that, I'll get a piece of that. I'm not, I don't have to get the exact bottom. What are you saying, Froggy? It's nice we did not do another big. Yes, it is very nice. And it could have been yesterday's pump and dump could have all been related to option expiration and dealer positioning, and somebody was off sides, and I bet somebody blew up. And people that trade Bitcoin especially are on margin. And I just saw the new figures today, and something that a lot of people aren't on margin anymore. I forget the exact number, but the margin balance went down by like 35% this week, which means weaker hands got blown out. Hopefully banks and stuff for stronger hands have bought the dip. And yeah, that would be great. That would be great. Oh, yeah. Well, you're too late for it. It depends on, I mean, I'm looking at it on a longer term perspective. I'm a big believer in Bitcoin just because you guys are, and I have other friends that are too, and believe it's going to, much higher. So, but if you're a day trader, that could be aggravating when you're asleep and you wanted to buy and you wanted to get 80,000 or something, and then you pass out and it's at 84 when you wake up. I mean, I hear you on that. Yeah, the barrier funds are interesting. Yeah, I do need to make some content on that. I could probably do the auto callables at the same time. It's because it's the same principle. FSCO, PFFH. Yes, I thought some of those are in the max factor. The max factor is really supposed to be for things that pay 6 or more. But I swear I have some of those in the max factor. And in fact, I have a closed-end fund show that I do once a week. I think I'm supposed to do it Friday night. So maybe we'll even do that tonight. I need to do something tonight. All right. Yeah, lots of blowups. I hear you, RJ. That's what limit orders get till canceled are for. True. That's true. All right. Froggy really hopes that the 25% barrier fund does well. Yes, that's a new one too. I forgot about that. We talked about that one last night. Is that the one from Calamos or the one from Innovator? I forgot. There's so many of them out, I can't keep up. Let's here. I'll show you what I found last night that I found interesting. Well, I got talking about these. I like this. I remember now I got talking about these other funds where you can't lose money, but we also looked at new auto callable. Right? It was in here somewhere. Defined income, dual direction. Maybe it was the Calamos that was the one we were looking at. Yeah, but I hear you on that, Froggy. I hope it does. I hope it does well too. All right, Calamos auto callable. So let's see if they're coming out with more auto callable income ETFs. Yeah, they have CAIQ. I hadn't even heard of that yet. I don't think we saw that last night, did we? So obviously it's based on the NASDAQ. All right. I'm trying to see what other information it gives us. Looks like this is a 40% buffer. So it's same as CAIE. Laddered exposure. They do one every week, so that's good. 5-year maturities. Oh no, CAIQ only has a 30% protective coupon at maturity. Okay, so it's a little bit less of a buffer. That's just the graphic they use on the other one. But that wasn't, we were looking at another one last night, and it was like a barrier fund. It was Simplify. Oh gosh, that's what it was. That's exactly what it was. I think it was the 25% barrier. Gosh darn it. All right. Of course, there's SBAR and XV, but it was called like XXV is what it was called. I'm remembering that now. That's right. It was called XXV. There it is. Yeah, the Ancarata. And I kept thinking, what's Ancarata? I thought maybe it's a person's name or something. But anyway, okay, yeah. So this one has, the 25% barrier. So right now we have SBAR with 30, and we have XV, I think, with 15. It's just kind of right in between. And yeah, this one, I guess, just came out. Okay, and this is what I was talking about. This is what I want to show you guys. Okay, so these right here are the individual bonds. This WOF means worst of feature. I'll blow it up. So this bond right here, they're playing AMD, Intel, and NVIDIA. And if this bond is triggered or whatever, and the other side doesn't have to pay you a payment if the worst of one of these goes under a certain level, whatever that is, probably 40% down, P100, 60. I bet that means 40%. Like here's a bond that's Costco, Waste Management, and what's W? Or is that Walmart? But anyway, it's whatever those three funds are. And this has a 50% barrier. Here's Tesla just by itself with a 40% barrier. I think 1060 means a 40% barrier. But there's another Tesla. Here's a Palantir one. And they have T-bills. Now, they had a good graphic last night, I think, that we looked at also. Fact sheet or flyer. Let's check this out. But yeah, I have high hopes for this one also. Yeah. So this is just an example of how it works with the 20% downside barrier. But we were looking at a really good graphic last night that showed you a bunch of different stocks and where the actual bonds were right now at this point. Anyway, but yeah, go check those out. You guys go check those out if you like them. Yeah, and I'll try to make some content on it. You enjoyed the closed-end fund show. Maybe I'll do it again tonight. I don't know closed-end funds that well, so I'm kind of like a fish out of water, but they're alternative assets, which I'm a big believer in. They get an income. I mean, options aren't the only way to get an income. I mean, I really like WPay, and they don't use options. So, I mean, so I definitely like covering the closed-end funds. Yeah, Simplify, that's right. So it's quite easy to know which closed-end funds to get. Just follow the long-term holding of closed-end fund ETFs. I really wish this to be true. Are you talking about closed-end fund of funds like SABA or something, or like because there's I know they have fund of funds that do this, that do it for you. Okay, the market is not done until MSCI decides whether to throw crypto firms like MSTR out of their index. Yeah, I hadn't thought about that, but I've been hearing that MicroStrategies might get thrown out of the index. And so okay, bonds. Okay, that's a good question, Mayor. Bonds have NAV the move also. It doesn't. You can look at a bond now that like a 3-month T-bill won't really move too much, but bonds, but like a 10 or 20-year bond, the NAV can go all over the place and you still get a yield. I'd say this: the barrier funds, they're similar to bonds. Well, some of them are called autocallables. So let's stick with the autocallables. That's literally a bond. It's an autocallable bond. But the thing is, but it's also like a barrier option. So as the market goes down, let's say it's a 30% barrier, but the market drops 15%. Okay, well, now if for new buyers that want to buy it, it's only 15% away from its barrier. So it's less valuable to those people. So let's say an old buyer, bought it when it had a full barrier on it. But then it starts going down and the guy says, I want to get out or whatever. He's not going to get as good of a price. The price resets with how close it gets to the barrier. Now, the thing is, all that happens if you pass the barrier means you miss an interest payment. It means the people that hold it don't have to pay you. They don't owe interest. But the NAV definitely moves because the bond becomes less valuable. But autocallables and barrier funds can also move up because if they have a 40% buffer or whatever, and the market moves up 10%, and now new people want to buy it, well, it's 50% away from the buffer. That's more valuable. So if you bought it when it's so they trade freely. It trades freely, just like any other asset. I'll say this though, it is a heck of a lot more stable than a stock investment. Let's compare SBAR, and that one has 30% barrier. Let's just look at it year to date against the SPY. Well, I don't think it's been out a year, but I'm just trying to make a point here. Okay, look at SBAR in the latest pullback. The SPY was down 5% or whatever, 7%, 5% or whatever. SBAR barely budged, but it did go down. And if the SPY keeps going down, SBAR will keep going down because the closer it gets to the barrier, the less valuable that becomes as an investment just on a math basis. So they do move. So I would say that the barrier options and autocallables aren't like this is what a T-bill looks like. Something that does T-bills or really short-term bonds. Those are all but guaranteed, and those just go up. But when you have a longer-term bond, like a 20-year bond, let's put on a 20-year bond in the SPY. It'll move all over the place because as interest rates go down or up, it changes the value of the bond. So here's TLT. Okay, so this is a bond, 20-year bond, and it reacts to interest rates. You can see it's not nearly as volatile as the market over this time frame. It doesn't go up as much, doesn't go down as much, and that's similar to what the autocallables will be, or the barrier options for that matter. So let's do an apples to apples comparison. So SBAR, what does it pay? It pays 17%, 20% or something. So let's run SBAR against SPY or something, an income producing asset that pays about the same. And I bet you SBAR's is way less valuable compared to doing a straight stock based investment, a covered call based investment. But yeah, now it looks like SPY is more volatile than SBAR. but they still, but because they're based on the market, they're still going to run the same general direction. I think they just give you extra safety because of the built-in buffer. But as the market goes down and gets closer to the buffer, it makes the bond less valuable. Shouldn't you get 100 cents on the dollar at maturity? Well, I need to do a video on that and see. But yes, I think you do. What's eked out though is if it goes under the barrier, you stop getting the coupon. You don't get the payment, the yield. So that makes it less valuable, and they factor it into the price. Marcus bailed me out. Tell me, is that right? What I just said? Marcus has studied these a lot more than I have, but bond prices move around before maturity. Yes. Just like interest rates, mark to market. And the same thing with barrier options. They travel, they're related to the market. They may not drop, they aren't going to drop as fast, or go up as fast. They're definitely safer, but just like the TLT is safer than the SPY, but the TLT isn't, totally safe. It can still do what, it could still trades freely based on interest rates. Wouldn't the single stock barriers have more risk than the probably, but you notice they had a bunch of them. I think they do one a week, and they do 52 of them. So you're basically paying the managers to put together, that you're letting them use their judgment. But yeah, I mean, I just like simplicity. I like indexes. I'm fine with the way SBAR does it. Maybe there's a market for, here's the other thing. I bet the single stock ones are riskier, but they probably get a higher yield too. They probably have a higher, just because the yield on these is priced off of the volatility, just like the yield off selling options. Everything's priced on volatility or the odds of it, how much it goes up and down, because it matters to the future value. So you like RJC likes the old YYY. I think YYY did really well last Friday night. I don't know if you were here last Friday night, but I think we did closed-end funds last Friday night. I'll do them again since you guys are talking about them and everything. I think, Cornerstone's incredible. Cornerstone is incredible. As soon as I got into this 2 years ago, started covering covered calls, I never heard of Cornerstone, but I got on Discords. I was on Todd's Discord, a bunch of, and Chimera's and rods, and that's all people talked about was CLM this. It's a 4-star Morningstar. Anyway, so I looked it up and I was like, damn, that's impressive. Yeah, that is definitely impressive. The fees are so how I didn't know the fees were high. I wonder how high the fees are on YYY. Put it in the comments. Yeah, CLM and CRF, hard to go wrong. I think we have probably several people in here that have those. Yeah, yields over 14%. You have a couple of business development corporations, which can be risky. Well, heck, stocks can be risky. Covered call funds can be risky. Look what Blocks is doing, but Blocks can be super rewarding too. I mean, I would be off of Blocks so quick if it didn't also have an equal level of reward, a more than equal level of reward potential on the other side. The risk and reward thing is, but these ones that are real stable, like SBAR's never going to be, SBAR's not going to move up too much with the market either, but it's not going to move down. So yeah, it's just what you're looking for. BR likes the barrier funds to smooth the portfolio out. Yeah, when you have red days. I'm using and I'm not sure it's the smartest thing. I'm using YQQQ to do that. But I could probably switch to, I thought about switching to TOAC, switching to some kind of short-term bonds that will also smooth it out. But a barrier option would do the same thing, and so would CAIE. Or I'd probably get CAIQ since I'm a NASDAQ guy. 3% fees on YYY. Wow. That's when people see their statement, they go, why did I buy this thing? 3.25. Yeah, that's a lot. That's a lot. All right, RJ, you have HTGC and GBDC, and you sold OBDC, which had some bad press, really. Well, so those are business development corporations, I guess. A business development corporation, you're basically giving your money to, it's like a private equity investment, right? I mean, you're buying a company at that point. I mean, I guess that's the same thing you do with a what are those funds that trade at, like, they open at $10 and special purpose company, SPAC. Yeah, it's similar to a SPAC or whatever. So OBDC is Blue Owl private credit. Okay. Well, I've been hearing bad stuff about private credit. They say that, well, you know, you hear bad stuff all the time when you watch CNBC, but some people say the private credit's going to cause the next crash or something. I heard a guest saying that. BDCs are risky in a falling interest rate environment. Yeah, hit that like and subscribe. Dan's here. Dan's the one that Dan's been helping me on some computer issues, and Dan is responsible for helping me get several things lately, and I appreciate Dan. But yeah, we're running 2 monitors today, and we're also I've got the computer running a lot better. And also shout out to Finding Serendipity. He's been giving me some advice too, and I've got this thing running like a top. The cockroaches that Diamond said. Yeah, I mean, I didn't hear Diamond, Jamie, but all right, let's check this out really quick. I thought this was a good look here. I had to reset this like 3 times. I was looking at the 1-day results, and I thought it was on. I just looked at it real quick, and I thought it was on. It was just checked on YieldMax, because all the YieldMax stuff was on here. I looked down and everything was YieldMax, Winter, Abney, PP, GUI. I didn't see GOW. You guys know I look at stuff too quick, but I was like, you know, Hui. I mean, everything on here was YieldMax. So I went up here and I unchecked, you know, all of them, and then I checked, but no, YieldMax just had a really good day. They dominated this list. I mean, Murney, AIYY, Dre. I mean, but you know, there's GOW. But then SMCY, Winter, OARC, Abney. I never see this much YieldMax at the top of the chart. PP, GUI, Hui. Anyway, ITWO. What is ITWO? I used to know, but I forgot. ITWO. I guess it's based on the Russell. Anyway, whatever. I'm glad it's up. RYLD. IWM. Obviously, the IWM had a big day today. Okay, so we're going to have to find out what IWTO is. But yeah, I was wondering, you know, because I'm trying to think, why in the heck is ULTY up that much? It never leads the other funds, but it's because the Russell's up. They have a lot of small stocks, and maybe I need to start using Russell for ULTY's benchmark. But in any event, IWTO. So what? Let's go back here. Oh, ITWO. Oh yeah, it's ProShares. Okay, I just ProShares Russell 2000. Wow. Let's see what kind of this one's not in the max factor. It needs to go in the max factor immediately. Wow. So let's see what they do. Derivatives offset. They have a covered call swap, and then they own so I love this. So they own futures to get their long exposure. Futures have a lot of leverage, but I don't think they double up or whatever. But they own futures to save cash, so they can have 100% of the upside or downside. And futures have tiny leverage. They probably 95% of their cash is free, and then they come in here and they get a covered call swap, so they don't have to trade, and that way they don't have to trade covered calls on the futures themselves. So they get a covered call swap. So they have futures for the long, the swap for the income, and then with the free money, it looks like they double up on stuff, you know, because then they buy some of the individual shares in the index. And these are a lot of ones that are in ULTY, you know, Bloom, Credo, or have been in it one time or another. IONQ. So, gosh, that's a dog. Look at that thing. Wow. I heard somebody say today that Aqua was going to the 40s or something. Check this out. like I say, I shouldn't watch CNBC all day. You hear all kinds of, it's the mainstream media, and there's all kinds of misinformation. But I'm just joking. CNBC is actually it's good. I mean, I like it. I was just joking. But man, the 40s. What's he getting that from? I mean, even if it goes down to this previous breakout, it's 57. But anyway, I hope that it doesn't. I hope that ULTY isn't going to bag hold it all the way down to the 40s. We haven't even looked at let's look really quick at this, at the super sextet. Let's see how we ended up here. So here's K yield. Finished the day up a little bit. I'll take it. Average stock was also up a little bit. Galaxy, Roblox, the Bitcoin stuff was down, and Broadcom. But look at this. They caught the upside on this shift for payments. Intel looks good. Shopify. Anyway, okay, so let's go to ULTY and see if they have any of that OCLO. They do it at various times. I mean, all of them have, I think. Maybe not blocks. But whatever ULTY is doing, I guess, I mean, just on a one-day basis, it's never outperformed on the upside before. They put gold in, but gold didn't really have a good day. They added gold and they added bonds the other day. They added leverage bonds. They have 5% of their portfolio on this TMF, which is triple leverage bonds. So I think we did get a bond rally at the end of the day, because I heard one of the guys from the Fed was out saying he was out saying they were going to have to cut in December, and then that caused the Fed fund futures contracts to rally. So maybe that one did really well for them. Let's look over here and just kind of check it out here. Yeah, ULTY just had a monster day here. And look, they outperformed their average stock. Holy cow. I mean, that's incredible. Good job, guys. Good job. Circle was up 7%. I want to see that TMF thing. It's called TMF. What's the ticker on that bond? I wonder if that well, I'm not seeing it here. They may have just done an option trade on it. Like, oh, there it is. No, there it is. Actually, it's not TMF. TMF is 5% of the portfolio, but that was not the reason they're up today. It looks like it's mainly Circle and Affirm and Google. They've done well on the Google thing. Okay, so let's check LFGY, see how they did, see if they have any of this OCLO. No OCLO. But even they did well today. Outperformed their underlines, their average constituent, I guess I should say. They don't really have an underline, they have constituents. But yeah, they caught some of that Circle and some of this bullish trade. PayPal had a big day, and SharpLink Gaming. Let's go over here to old Blocks. Oh, come on, Blocks. What are you doing to us? I mean, your Blocks' average stock was up, but somehow they still managed to blow it. Gosh darn it, Blocks. Probably the ones they have more of. They have more of the ones down here at the left. FBTC was down 2. And I bet you HODL was too. That's a wrong quote. That's never right. Anyway, I'm sure HODL was down. FBTC was down off 2. Ethereum was off 3. And then they had Bitfarm was off 6. Now maybe they'll recover. Maybe they'll recover tomorrow, Monday. Let's look at K yield. All right. So yeah, here's K yield. So K yield caught that shift for payments trade, and they got the Intel also. Shopify, HIMS. All right. Let's look at ULTI and see what it's doing. Oh yeah, this one's jacked up for some reason. I guess we could go to the here's what they have. They have Oscar, SanDisk, Lemonade. I don't know why the chart doesn't work. I don't see Oklo. Yeah, this is jacked up. There's no way ULTY was. Google sucks if I hadn't mentioned it today. Yeah, this is pretty cool. I'm getting used to this. I'm going to switch the room around where I can watch TV when I talk to you guys so I can comment on what's going on. It was fun to have it this way just for change of pace. All right. Diamond said, okay, Diamond and Blue Owl were beefing about private credit defaults. Yeah, okay. That's probably related to what I saw. All right, Max, another way to hedge against what's maybe coming is going abroad. Yeah, like DAX, ETF, or MSCI Europe. That's right. NEOS does have NIHI. And I wonder, let's look at NIHI. Good tip there. A long time ago, I saw a prospectus from Defiance for an emerging market covered call fund, and it never did come out. I mean, like 2 years ago, they were going to do covered calls on the emerging markets. Okay, NEOS, yeah, MC, so yeah, high income. Let's see how high the income is. 1.5, so we'll call that 2. So it probably 8 or 9 when it gets to a year. Yeah, this one also needs to go on the max factor. It's just too new. It's just too new to be in the max factor. So you have it. All right. Have you been happy with it, RJ? Hey, Greg, thanks for being here, bud. All right. Closing funds are required to show all the hidden costs that ETFs don't have to show. These fees are not deducted from the account. They're already reflected in the asset value. Yeah, good point. It's a different structure. I mean, people that specialize in closed-end funds seem to love them. So, you know, what is the symbol for that? It's XXV, right? Or no, for the new Calamos one. CAIQ was one I saw. But Brad will answer that for you. But I showed CAIQ, then something called XXV today. XXV was the one with the individual bonds and the 25. Well, that's what the XXV means. Yeah, I hope it was the load today as well, Greg. You and me both. It's probably nice to have chat. Yes, it is nice to have chat on the second screen. And that day I was getting trolled. What was happening is I had they were showing up on my stage, on my YouTube stage. A couple times you guys didn't even notice it, but I looked down at the stage and there was like an inappropriate picture down there. But they would use like people's names that were in the chat, and then they got in the chat too. But anyway, that happens now. You guys never know about it because I just sit over here and I could go over here and block them, and you guys never see it. So, and then I have you guys to police the froggies on top of policing the comments. If somebody comes in the comments and starts saying something disrespectful, or Froggy will get them, or Mark, or any number of you guys. Dan, if he's still here. Now Clip did really well during the time of the tariffs, right? When America was, did well on a comparative basis. So yeah, CIQ. Okay. I remember that one. All right. So RJ has the whole NEOS ETF except the ones with the bonds. Yeah. What's the bond one they have? Is it BNDI, I think? Yeah. BNDI. Mayor has Clip. It's the only Chinese internet stock. Yeah, it's based on CWeb, right? Which is a Chinese ETF. A basket of Chinese companies probably has Tencent and Alibaba. How far are we going to drop? Well, that's a good question, Mr. Langford, CM. That is a good question. I mean, maybe the market's through dropping, but it just looks to me like to buy Bitcoin right now would be catching a falling knife. I want to see some signs of life from Bitcoin, but maybe the market's, at least the SPY, it's maybe the market's put in a bottom. We can only hope, right? I don't think I said it earlier, but remember, this is not financial advice. I just want to remember to say this. Consult a professional advisor. Also, don't forget you can support the station at paypal.me, Max Convexity, or you can like and subscribe or do whatever else. You were talking fixed income. I knew what you meant, though. They have 4 bond ETFs. Okay, so let's look at those. Fixed income, whatever. Bonds, fixed income. I know what you meant. So they have the NEOS, and NEOS does a great job. Let's look at Bondi. This one's in the max factor. This one's definitely in the max factor. And it pays 5.6%, so it barely makes enough to qualify for the max factor, but still it's an alternative that could work. So here's an example. So this is based on bonds. Yeah, government bonds are guaranteed at maturity, of course, but they still have to trade, with the market. So this one in April went from like 47.5 to 45. So that's not that bad. It's only down 5%, which, when the market's down 15, that's actually pretty good. And lately rates have been dropping, and people have been thinking rates are going to continue dropping stuff. So bonds have been bid and rallying, and that's awesome. Yeah, Bondi is awesome. It looks like they write put spreads to get their enhanced income. See that 6250? They probably own the 60. Well, yeah, you could see it. They have 3 tranches of put spreads. They sold the 6250, sold the 6200, and sold the 6125. Then they bought the 59. Several ones down here in the 5900s. This brings in a yield, and as long as the market stays above 6250. They'll collect the yield without any bad side effects, and at the same time they still get the income from B&D. B&D itself, I think, pays. I'm trying to think. B&D probably pays what the 20-year pays, probably 4.25 or something. But it's called enhanced income because they get, or it looks like they have half the portfolio in B&D. So even if it gets 4%, they get 2% of their alpha or their yield from that, I would bet you. Then they're also an AGG. So, okay, they're 100% invested in bond ETFs, but through the use of a little bit of, because you can probably a little bit of leverage or whatever, they sell a few really far out of the money options. And so unless the market just crashes, these are easy money. Let's go look and see how far those are out of the money. And that's how they enhance their income. They write those far out of the money options. Yeah, so 6250. So it's like a barrier option in a sense. Because it's a bet that we don't fall under here by the end of the month. So, that's from 6,300 from where we're at 6,500 or something, 65 and a half. Anyway, so it's to be a pretty severe drop. But they've been selling those all the way up, and I'm sure they're just printing money, and they use the little bit of money they make off those to enhance the yield. There's a company called Theta, THTA, that I don't like. No one really likes, from SoFi. Jay's the sub advisor, but they do a similar. They do something similar, but I don't like this fund. But this is the same thing. It's a fixed income enhanced product. And what these guys do is sell super far out of the money, put spreads and call spreads. But every once in a while they'll get, even though they went super far out of the money, it wasn't far out of the money enough for March, and last August it got hit also. But anyway, anytime you see enhanced yield, it means it's a company that is buying bonds and then usually selling out of the money options to try to generate a little safe yield. In THDA's case, it just didn't look like it's working out that well. I want to go to THTA really quick. This one's in the max factor, just for comparison purposes. It pays. I didn't realize it paid 13%. That's pretty good payment. But see, what these guys have is T-bills. They own T-bills, and then they're selling really far out of the money. Like they're selling NASDAQ put spreads. Way underneath the market. I mean, way in 21,000, way underneath the market. Those are the kind of ones you win, 98% of the time. But when you lose, it can be an outsized loss. Anyway, I want to see how much AUM they have. I bet they've lost some AUM. Yeah, they only have 34 million. I bet that's come down, and it has. It used to be 50 million. But yeah, there's a lot of fixed income products that offer enhanced yield. Doesn't FIAX do that? Isn't that the same as, and this offers a lot of enhanced yield. Doesn't this pay 24 or something or 12? It pays quite a bit, I believe. And this one's in the max factor. Okay, it pays 8. But you can see here, I mean, they lost a lot of principal. They dropped during April. They dropped from 20 to 17.5. That's about 12% or something, but they never recovered. They have never recovered, or they haven't yet. They haven't yet. HYBY is over an 8% yield. Okay, so yeah. So I can tell by the ticker, that one is based on high yield corporates because what's the HYB? The HYB is, I don't know if there is an HYB. Okay, well, I was thinking it was based on the HYG, which is the iShares high yield corporate. And so there's people that do HYGW is a covered call strategy on the HYG. I'm thinking maybe HYBW or BI. Let's just take a look at it. NEOS Enhanced Income Credit Select ETF. I mean, it hasn't taken back its April high, but this is a different type of, bonds are different. You shouldn't get as much downside or as much upside. Should have a lot less volatility. Look in April, it dropped from 52 to, at the worst, 47. That's nothing. That's like 8%. So, it's like 8%, and you're getting about 8% a year. So let's see what they're doing. They have high yield corporates, but they have a different one. They have, HYLB is what they're based on. Okay. That's a different, okay. But so they have 31% high yield corporates, and then they have some SPDR high yield, the SPDR equivalent, which is SPIH. And then they have, I never heard of that one, but that's the BlackRock probably equivalent. They're using high yield corporates. Same thing to enhance the income. Look, they're writing the 6250, 6200, 6150. They're just betting against a crash, a major down move. They're selling options that these ones should probably win like 80% of the time. And a high yield corporate, I think, pays, I don't know what the high yield corporates pay, but anyway, but when you throw in the option income, it gives it a little kicker. I would think the high yield corporates pay 8 or 9 by themselves. Let's look at sometimes more than that. Let's look at HYG. This is the high yield corporate that's kind of my go-to. I use kind of for a benchmark, but yeah, okay. This thing pays 5.75. Okay, well, so regular bonds pay, like based on the 10-year, like 4.25 or something. So this is enhanced. You can, because that's government. Then you can go to a high yield corporate and you get about 6. That's about a 50% improvement. Then you could sell options on it and get one of these other products and get about 9 instead of 6. That's another 50% improvement. And it's about double what, the government bond, the TLT pays. You saw today that the Monday before the open has been, there is some kind of trend about weeks that are short for one thing, weeks that have all. July 4th also it's almost always up. There's some kind of trend about that. I knew it was NEOS, RJ. NEOS does have some nice funds. A lot of these companies do. So does Rex. NEOS is the king of the income and NAV stability, correct? They have that SPY-I and triple QI is about as good as it gets. Let's see. Yeah, I think Marcus is joking there, or Brad's joking there. But Yieldmax is 1 as far as yield goes. Yieldmax is 2 as far as yield goes. Granite Shares 1, Yieldmax is 2, probably then Round Hill's 3. But then on the other end of that, as far as stability goes, is probably Neos is probably 2. I'd say Curve is 1, Neos is 2, then probably Rex going the other way, Round Hill, Yieldmax, Granite Shares. Yeah, the Bears go home on short weeks. That's a good trend. Yieldmax, they're probably number 2 in distributions. I mean, they can't distribute like Granite Shares can. Man, those Granite Share guys, they really distribute. Hey, Bob, what are you doing? Or Robert, you sold 20,000 shares of Tesla. You bought 1,000 shares of TS2 at rock bottom. Should get 400 or 500 a week on the TS2, and you still have some Tesla that you're just going to leave. All right, well, that's awesome. I hope you like that TS2. So that's a great example of what I'm always saying. A year ago, Tesla, if you wanted income off Tesla, still only showing town. I guess there was TSLP, but it doesn't pay much income. So if you want high income, only showing town. Nowadays, there's other choices. It's great that things like Rex and have started doing similar stuff. You aren't sure if VGI sells options. Otherwise, I don't get the high yield. Let's go look at VGI. VGI, I forget. I've seen that one before, but I forget. Yeah, Vanguard Global Multi-Sector Income Fund. We can just look and see if we'll look at the top 10 holdings, and if it has options in it, probably sell options. They announced distribution. It looks like they pay monthly, June, July, August. It looks like they pay bi-monthly, March, April, May, June, or July, August, September, October, November. Maybe they pay quarterly. November, March, June, August, November. It pays 12.4. That's really good. Maybe they just have high yield bonds, some high yield corporates. I'm trying to look at the top 10. It's not showing us the top 10 because it's a closed-end fund. ETFs will have a top 10 right here. The closed-end funds just give you different metrics. But yeah, that's impressive. That's impressive. It says closed-end fund debt. Maybe they do like senior loans and stuff or distressed loans or something also, but it's multi-sector income fund. Probably do high yield corporates, but they don't concentrate in one sector. All right, what are we going to do? We're going to mix that with SPY-I in the last month, and you'd be up 3%. Yeah. Hey, Alan, how you doing? You're watching, Bond. Hey, thank you for being here. I appreciate you. All right, so what are we going to do tonight? Closed-end fund Friday night. I'm trying to think what I have going on tonight. I'll probably do it a little bit later. I'll probably do it at 8 instead of 7. 8 my time, which would be 9 your time. But I'll get it ready to go. I have some other stuff to do between now and then. But yeah, we'll do closed-end fund Friday night. And then also anything that we forgot to talk about here, we can take up later. But I really like this. If Dan's still here, thanks for helping me out on the monitors. I had an old monitor, but Dan, I didn't have the cable for it, and Dan hooked me up with some cables. And but it's not even really that old of a monitor, so I guess it's pretty old. It's a 24-inch LCD, but it's fine. I mean, it's awesome. It's awesome. But I'm gonna get the room switched around, and I'll put the monitor on a table higher so I don't have to look at it. So it doesn't. I'll get the mechanics of it down a little better, and I'll try to put it where I can still watch the camera and respond to the questions. All right, guys. Well, in the absence of any other questions, remember, not financial advice. consult a licensed professional who knows you and your own, particulars. Somebody on the internet can't know your particulars, not to mention I don't have the training. I may have in the 90s, but heck, that's, I can't remember to share the screen half the time. So, I probably forgot all the training I got. So that's why they make people get licensed. Anyway, check all this with a licensed planner, of course, or anything you hear from anyone. And then also have a good weekend if I don't see you tonight. And also don't forget, you can always support the station if you so wish. And other than that, I appreciate you. You like discussing overlap. What you like to discuss what do you mean on overlap? I'm not trying to get rid of you. You'd like to discuss overlap. Give me a clue. Type it in. Tell me what you mean by overlap. You mean when two funds have the, if you, okay. Let's see. I notice a lot of people hold a bunch of income SPY. Why? Well, so you mean like people have T-SPY and SPY-I and Y-SPY and that kind of stuff. If that's what you mean by overlap, my theory on that is because those are some of the best funds, because the SPY is so liquidly traded. That's for a while, that's all you had was SPY, covered call funds. Just recently we got single stocks where you can branch out. But if you want a really good stable fund, there's like 4 or 5 of them in the world. There's T-SPY. I'd put SPY-T up there too. And I'd also put XDTE, but there's SPY-T, XDTE, T-SPY, SPY-I, and probably a few others I haven't thought of, but that's because it's the biggest asset in the world. There's also a few based on the Qs, but we don't have many choices other than that. Is that what you meant? Yeah. So yeah, that's definitely, you don't need 4 SPY income funds. And so the same could be said of me. I mean, I have blocks and I have BITK. I'm probably overloaded in crypto, and I have ULTY. It has a lot of crypto in it. I probably could just knock it down to just blocks or just ULTY. I probably don't need all of those. But still, I think the better thing is to figure out how much you want crypto to be. I still like to have different companies with different ideas. But if I want a 20% allocation in crypto, I have BITKs 5, then I should go 7.5 in blocks and 7.5 in ULTY. And I'm probably overloaded on crypto. And because I have the same, and I used to have LFGY and then, yeah. So that's a good point. That's a good point. I just accidentally started that. All right. What did you say to themselves? You like SPY-I because it's 500. Yeah, me too. And I think that's why there's so many available. Also because it has the most liquid option pit in the world. I mean, you can, and you can get in size. You can get in and out in size where, somebody doesn't have that, you can't do that in everything. So yeah, but I think what Marcus is saying is that's fine, but either choose SPY-I or T-SPY or SPY-T, but don't have all 3 of them or whatever. There are a lot of choices in the SPY category and a lot of choices in the Q category, but I think it's a function of that's just where the assets are. You looked into Starlink for your home. They want $1,000 surcharge to sign up. Wow. Okay. Marcus is saying no. I understand having 1, maybe 2 at max. You really don't. Yeah. Oh, GPIX is a good one too. Yeah. Yeah. No, I know it. Good point, Marcus. You look forward to seeing how QLDY does in a market run up. Well, I mean, heck, it has totally uncapped upside, and it didn't do as well as ULTY did today. But today was a one-off. That never happens. ULTY had the day dreams are made of. I don't know how ULTY was up that much. I mean, but anyway. Yeah, I can't wait to see how it does in the market run up. We really don't know. I was doing a daily show, and somebody asked me in the comments, said, why don't you do the lightning spread show anymore? But what I did on that show is I would look at QLDY and I would look at blocks. But that show has been replaced by the show where I look at all 4, where I look at ULTY, ULTI, blocks, and really K yield. But it's on that same graphic. I talk about QLDY. So I'm consolidating shows is why I don't have that one, but I still like it. And QLDY is doing on this graphic, you can look on this graphic, the diversified divas. This is since inception. QLDY is the best one out of any of these other funds. Not as good as Aspire, the Qs, but it's beating Chippy and GPTY, which are really good funds. It's beating WPay, which is a really good fund, as is K yield. I know that you guys would probably all agree with me on that. I know that you guys don't like some of these other ones, whatever, but these right here are really good funds, and QLDY is beating them, and that's really impressive. Yes, but I'm with you. I can't wait to see how it does in the run up also. I'm definitely with you on that. I didn't know Amazon's coming out with a product called Leo. That's interesting. Bezos does have a space company, right? I forget about that. He has the rocket that looks like the phallic symbol that Katy Perry supposedly went to space in. Yeah, so they probably have their own competing product. That's interesting. Good job. I think you'll like QLDY. I mean, it's definitely protected capital well, because Howard's a capital protecting champion, and his K yield was down about twice as much as QLDY. So, and that's I mean that as a compliment. I mean, because Howard knows what he's doing. You might not say so on some of the other people, but I mean, if you could beat Howard, and GPTY is a darn good fund also, and I mean that's really impressive. You'd like to see the weekly payers that hold the NAV. Yeah. I don't have the max factor separated into weekly payers, but that would be easy to do. We could have an all weekly payer show sometime. Anymore, that's about probably, I bet you there's I think there's 200 funds in the max factor now. I bet you probably 75 of them are weekly payers. I mean, you know what I'm saying? But basically, watch my Max Factor Top 20 show. That if you're in the Max Factor, you're doing something right. I mean, that those are always the ones that perform best. Like I thought I still had yesterday's Max Factor up. I think I may have closed it down. But anyway, yeah. But I'm always looking. That's always what I'm looking for, is protect the NAV. I don't think that's all, though. Like I say, funds can be too safe. There's lots of funds that, that protect the NAV, and that's good, but they still don't have as good of total return. At the same time, you don't want something that's, I get that, but the Max Factor tries to identify the best alternative, or the best compromise. I just mentioned too. Oh yeah. Okay, the VGI going to 530 and okay, VGI is going to 530 in 2026. So don't run to the order queue. Okay, good advice. Hey Seth, I don't know if I've seen you around here before. Okay, how's that going, Fish? Somebody else was thinking about buying LL. It was Chad. I don't know if Chad's in here. Easy Life. I think Chad was thinking about buying it, but his wife told him to buy it or something. Anyway, okay. Well, I missed out on the Amazon Leo. Is it space based? I'm just putting that together. I can't believe I never even heard of it. But I mean, Elon and Bezos are in a, and also Richard Branson are in a contest with each other. So yeah, I don't doubt it. I'm sure that space-based internet's the wave of the future. Greg, I'm glad you're happy with QLDY. That's one that I like. That's one that I picked that I've been happy with. So, I've picked some other ones that I ended up not liking them, but that one has definitely been one that I think has performed exactly like I expected, and I've been super happy with it. Oh, that you mentioned QLDY and Chippy. Yeah. Well, but you were saying that, oh, yeah. I just mentioned too. Let me ask you this, though. Every one of these in here is a weekly payer, right? I mean, But I thought you're talking about on that. You wanted to see me compare a list to get out all the weekly payers and do like a daily factor show on all the weekly payers. Maybe I misunderstood, but yeah, I was just saying that there's a ton of these in here that are. It seems like all the popular ones, all the ones I talk about are weekly payers. I mean, anymore, right? It seems that way anyway. But back in the day, it was more rare to be a weekly payer. Nowadays, it seems like seems like all the popular ones. Okay. Oh yes, low Earth orbit, of course. Leo, of course. I got it now. I think I have heard it before. Now that when you put low Earth orbit, then something clicked. Like I say, I can't remember share the monitor half the time. So I'm good with names though. I know that I've never seen I don't think I've ever seen Seth in here before. Sometimes I'll recognize a new name, but I try to be good with people. But yeah, with facts and with remembering to do stuff, I am not. Anyway, but yes, competition's good. I've heard good stuff about Elon's product. In fact, I have a friend that actually has it, and they have a house in the country. It's probably 2 hours outside of Dallas and 2 hours outside of Waco. It's in East Texas, probably an hour away from Longview. So it's in the middle of nowhere, and they're really happy with it. They go out there and work on their farm, and yeah, they're really happy with it. And I don't think they had to pay $1,000 surcharge though. And I think there's a like a miniature version and a big version, and they just got the miniature version and set it outside, and it works great from what they tell me. Solar Max, it's a good tool. I agree with ES Peaks at 66.92, 375 days after support at 53.75. So are you talking solar cycles or something? Is that what you're talking, Seth? Is a good tool. Yeah. So is the what are you saying? Is the top in? Is the peak happened? We need to sell? Oh, you're saying after the support at 53.75, and then before that there was support at 35.72 from 1801. All right, the max factor should have it. All right, I'll do it. I'll do it if the max factor should have it. Oh, in Jamaica, it's the only thing working after the hurricane. All right, 1 year, 2 months, 4 to 5 days from a solar max, like a PI max, 1245 hit return. We made a low at 1801 at 2:37 p.m. I was charting for the past 6 months, and CLN beat Triple QI, SPY-I, GPIQ, GPIX, T-SPY, XDT, QDT, TDAC, and others. I believe, didn't CLN win the max factor last Friday night? Wasn't it number one? I believe it was. We'll find out. We'll run it again tonight. The movie PI, I don't know if I remember the movie PI. I don't know if I remember that movie. I know that I've read books, or not, but I've seen people that do cycle analysis. Well, I mean, what about Elliott Wave? I know it's not what you're talking about, but there's all kinds of more esoteric ways to evaluate the market. I had a friend that got real into Elliott Wave, and then there's harmonic. There's something called harmonic wavelength, something. There's all kinds of really interesting esoteric ways to read the market. So it says max hit return at 1245. It was about the stock. So what do you mean hit return at 1245? Like in the comments section or something? I'm just not following. I'm happy to try to figure it out. Oh, there's Imsol's gave me $2. I didn't see that. Okay, well, I need to go back here and make sure I caught everything also. Hey, thanks, Imsol's. Appreciate that. I appreciate that very much. The channel's doing great lately. Oh, he said it was in the movie. Okay. PI was directed by a famous director and it's about the stock market. Okay, well, I need to check that out. I love stock market movies. I mean, The Big Short, Wall Street, Wolf of Wall Street, although Wolf of Wall Street's not really very realistic. It was based on a true story, though. But I like the ones like The Big Short and Margin Call that are more kind of about the inner workings of the market. I really like Margin Call and The Big Short. Okay, so that tells me CLM can hold up in a down market if you drip a NAV. Heck yes. Heck yes. Oh, he was a stock market genius. Okay, well, yeah, I'll check that out. I'll check that out. I download movies all the time. I like to. I use Pirate Bay, as a matter of fact, and I have one of those things where you can't get caught. I'm trying to think what it's called. Virtual. It's like a virtual private network, but it's something different. You guys know what I'm talking about. But yeah, I'll check it out. Redfish. The only catch is the last 6 months with Cornerstone is they went through an RO, so you would get upside you wouldn't normally get. So it's like an unfair comparison in the past 6 months. But I bet you could look at Cornerstone over a longer time frame. Let's do this. Let's do CLM and let's do SpyEye. But let's go back as far as we can. SpyEye came out in 2023, I think, 2024. I mean, Cornerstone's damn impressive on this chart. Look how it, or actually, no, it isn't. I was confused. It actually, based on this time frame, it actually lost more than the market for a while. I don't really care as much about the final. I mean, I always look first to see which one protected capital best. But yeah, let's go over the past year. This is what BR's, I think, the points he's making. Let's just run it from like year to date, and it probably looks really good. And it looks like year to date it's about the same, but SpyEye looks pretty tough there compared to Cornerstone. But SpyEye doesn't pay as much as Cornerstone, right? Cornerstone pays, well, let's look. Cornerstone pays $1.33. So if that was a year, it'd be $1.50. $1.50 on 9 is 15%. SpyEye pays about 12%. So Cornerstone does pay a little bit more. But I know that 15% doesn't include the rights offering. And I just eyeballed that really quick. That could be off by a little bit. Yeah, VPN, exactly. And a VPN, I don't know if that totally keeps you from the cable company catching you. Also think it comes down. I also have Surfshark, and I think Surfshark has a VPN built in, or maybe that is a VPN. Yeah, it does keep you. Yeah, proxy server, exactly. I love downloading movies. I'm going to watch that movie tonight, the new Paul Thomas Anderson movie. There's finally a good copy out. For a while, there was a bad copy out. The battle of something about battle. It has the word battle in it, or war, or something. You guys know what I'm talking about. Cornerstone, yeah, Cornerstone is good, yeah, for sure. Imsals, you think Cornerstone is supposed to be good, but as Todd explains, I think you have to buy. You have to take advantage of the rights offering or special offering times, which I don't understand. I guess that's it. But Todd has all kinds of e-guides and stuff. I bet he'll help you figure that out. Todd, I mean, you can't eat capital gains. You hate having to sell shares when you need money. Yeah, that's the good case. So I saw a video the other day that one of you guys loaded in my Discord. It was BR, or no, it was SB actually. And it was a new guy. I like the guy. He's a data-driven guy. He's a new YouTuber. He has like 500 people. but he made a video and real scientific, and he had really good information and stuff. But he went back and showed any of these funds, Triple QI, SPY, any of them, and you put them against just selling stock, and the selling stock always comes out ahead. So, I mean, and I've done some studies like that too. When you go to Portfolio Visualizer, usually the just selling stock does usually win, but a lot of people don't want to just sell stock. People like to get the check, and, you know, but I guess you have to realize that you would do better theoretically just selling stock. There's funds that do that. That's what XPay does. XPay says, well, you know, we'll just sell stock. So I guess there's an ETF that basically does it for you and then sends you a check. I just think people like getting the check and either dripping it or taking it and putting it into another fund, getting a high yield check and then buying a growth fund with it or whatever. So I think there'll always be a market for the option strategy funds, even though mathematically, he's not the only person that showed it. I didn't know if one of you guys saw that. It's in the video section of Discord, and it was good. I subscribed to the guy. I forget his name, but I really liked him. But it's in the video section. If anyone wants to go watch that, SB loaded it. You're curious if the drip on that chart is at NAV? Probably not. I'm sure it isn't. So, and I always say that, and on the max factor, the closed-end funds don't, you know, I can't figure that out in the max factor. So, yeah, but that's the thing. If you're into closed-end funds, then you know how your closed-end fund works, and you just know that maybe, you know, on a chart, it's going to be low, you know, but I can't think of a way to take advantage of that in the max factor or to program that in. The rights offering, it isn't somewhere where I can scrape it. It isn't available. And plus I specialize in options, so I don't care that much about it. I just use those for comparison purposes. But I always, whenever I do that, I always say, hey, you probably could do better depending on, you know, depending on if you're broke. Some brokers don't let you drip a NAV also, right? And some brokers don't. I mean, and then it depends also if you take advantage of the rights offering. If you miss the rights offering, if you don't watch Todd Station or whatever, then, I mean, that will also affect your returns a little bit. But yeah, I'm sure dividend channels, I'm sure it doesn't show NAV drip. And I never show NAV drip. What I look at is I always look at the bottom chart. I just want to know what the dividends were and what the return was. If you look at the top chart, it includes dripping, but so if it's closed-end fund, it won't show it NAV for sure. You know, but I just look at the bottom chart anyway. Yeah, I figured it wasn't. But anyway, you guys that have closed-end funds, you guys are all aware of that. So you know that when you look at a chart, it's wrong. Just like on Tasty Trade, it shows a chart of whatever, and it, you know, Tesla, and it goes down and to the right. The brokers never put in there the dividend. But I know, hey, it doesn't really do that. But, you know, and so you have to check a little switch. But yeah, I wish dividend channel is not great. And whenever I want to check it against something, I go to total real returns. But this is just really fast for doing here. Total real returns is just more convenient. So Todd doesn't cover many of the advantages of income funds. Really only pointed out the downsides. Okay, I don't really watch his station that much. I've been in his Discord. I used to go in his Discord, but I got kicked out. He tried to sell me e-guides, and I said, I'm an influencer too. I said, why don't you buy my e-guides? In other words, I'm not a good prospect for Todd. But he didn't know that. He didn't know who I was. I said, I have a channel too. I'll sell you my e-guides. I don't have any e-guides. And no, he laughed. And I said, hey, look, somebody from your Discord, when I first got into Kamir's Discord and Rod's Discord, I got invitations for all kinds of other Discords. And somebody from Todd's Discord put me in there. Well, then Todd was just going through his sales funnel or whatever and seeing who he needed to sell to. And he hit me up and one time in the comments, and he said, anyway, I told him, I said, look, I don't even think I'm really supposed to be in there. I'm another influencer. I'm my own Discord. I'm selling my own stuff. And so it was no harm, no foul. I mean, we're buddies and stuff, but so I didn't really get kicked out, but I'm just, but I don't think I don't know if I got kicked out or not, but anyway, I never went there anyway. I just went there because I was just meeting people. I was just meeting people. Cornerstone does a rights offering when the fund goes to 130% of NAV. Okay, I see. Whenever it's selling at a premium, then they do a rights offering to entice. That's good. That's good to know. That's good to know. And Mac or Mark, that's right. Fidelity does drip a NAV. Okay. Fidelity and E-Trade drip a NAV. Okay. Greg says, thanks. I didn't know that, but it helps to understand. Yeah, the rights offering are a mystery, but to me too. But I've been thinking about getting some. If I got some, then I would probably study it. But since I don't have any, no, he didn't. I don't have any guy. But I was just joking him. I said because he had no idea who I was. He goes, what? I go, yeah, I have my own YouTube channel. I have my own Discord. Because, he was trying to sell me e-guides. I was like, why don't you buy some of my e-guides? Anyway, it's funny how some will teach their own. Some people hate covered calls. Some people hate closed-end funds. Some people are, or some people believe closed-end funds are the only way to go. Some people think covered calls are the only way to go. Some people, believe the math people lots of times will just say, just sell stock. And I've tried to disprove that a couple of times. I've tried to put in some really high yielding ones but it's hard to disprove. Just selling stock usually it's usually not a whole lot better, but just selling stock usually comes out better. Hey, Eric, Seeking Alpha has the charts that show returns with the NAV drip. That's good to know. That's good to know. Froggy likes closed-end funds, but they have some wild fees. But like somebody addressed that, right? The fees, they have a different way of having to show the fees. ETFs can hide the fees more, or an ETF shows that the fee is already when the price already includes the fee, and on a closed-end fund it doesn't, or something. I mean, I read that comment. I didn't really understand it. I checked NAV on Yahoo Finance, XCLMX, and multiplied by 1.3. That's good to know. And then you can estimate when the next rights offering is. Cornerstones are reasonable. Yeah, it was up there, Froggy. Somebody said it was a long time ago. It was up here. Oh, I didn't see this one, RJ. What were you saying here? Maybe we can cover microsectors by Rex. They co-manage with BM. Is it a yielding funds? Microsectors by Rex. I mean, I tried it in the max factor. It's mainly, if it's not covered calls, it has to be something that pays 5%, 6%, 7%, high yield. Pays more than bonds do. Bonds pay 4%. And less. But anyway, it's up here somewhere. Hopefully somebody that made the comment is telling Froggy the thing here. It was up here before we started discussing overlap. Man, there's a lot of comments. I missed that super chat the first time. That's awesome, M-Sols. Where is this? It was right up in here somewhere. There we go. And it was Brad. We should have known. Closed-end funds are retired to show all the hidden costs that ETFs do not have to show. These fees are not deducted from the account. They're already reflected in the NAV returns. Good information, Brad. Last year you made $300,000 in dividends, but your principal only increased by $50,000. So yeah, I hear you. But you don't have to do just dividends, right? I mean, most financial advisors, will say, 70-30, 60-40, and being growth, and then fixed income. And then in the fixed income portion, say you have half of that in bonds and maybe some in covered calls and some in closed-end funds. And then you should still have plenty of growth from the 60, the 60 or 70% you have in stocks. That's what, hey, Chad's in the house. That's what most people say. Hey, Chad, did you ever buy LLII? Weren't you thinking about LLII? I was talking about you. I said, I thought your wife said that she wanted you to buy it because she's a nurse or something like that. But you weren't going to buy it or something. All right. Who never recovered? Froggy the last year. Oh yeah. Okay. Yeah. I hear you. But it doesn't have to be all or nothing. You guys know that. All right. Had to stop by and tell everyone we got Zombie here. GOOW is still murdering it. Yes, they certainly are. And we looked at that already. I mean, we saw GOW right here. GOW on the day was the number 4 performing fund. It didn't outperform Murney or AIYY or Dre, but it was number 4. Google's been killing it. Google has been killing it. I think that's ULTI or ULTY had the best day probably ever had. I don't think I've ever seen it do as well as it did today, but it's probably mainly because it has Google. Google's been a great trade. ULTY got Google before the announcement came out, or they bought it the day of the announcement. So they've ridden it all the way up. I got you. I got you now. And that's kind of one of the features of covered call funds sometimes, but you could prevent that from happening by using lower paying ones to pay 8, 10, 12, 14, 15. Then it's not as much of your, the odds aren't as high, but that is always a risk with covered call funds. I got it. There's just so many comments. It's like having, 10 conversations going at once. I'm trying to talk to all of you guys, but sometimes like I say, I can't remember to share the monitor half the time. So it's a miracle that I can remember anything. All right. Also, you know what I could do now? Would this make it easier next time we have a live? Would it make it easier like tonight when I do the daily factor? If I did this, and then you guys can see that. Anyway, I don't know if that helps you guys, or you guys are just looking on your phone at the comments, but this kind of makes it cool too, where you can see. And then I don't have to necessarily put everything up. Then I guess I don't have to put everything up. I can just read the most recent comment there. But sometimes I do like to drill down on a comment. But the other thing, though, if I do it this way and I don't like a comment, there's something inappropriate or whatever, I don't want to talk about something, I just don't click on it. But I don't know. I guess there's advantages and disadvantages each way. Well, I guess that's a good point. I mean, of course. But in the bottom corner there, I mean, you just do it like small and regular. It's fine. I mean, the max factor stuff's always up here. So anyway, I like to make it easy for you guys, engaging for you guys. Can you use the up and down arrows and space bar to show the comments? Just curious. What do you mean? I don't think so. I think when I do this way, it's just automatic. But if I don't do this way, if I could just go like this, like just hit the down arrow now, or maybe space bar. Okay, space bar turns the comment off and then down. Well, I can do this. I can go up and down to look at one. You guys can't see that. You guys can't see that because you guys are just looking at this. All right. I'm still doing on the old thing where I'm thinking we're all looking at the comments together. So anyway, I do think it makes it a little bit more engaging for you guys to do it like that so you guys can see it. All right, guys. Well, I'm gonna get out of here because I got to get ready for this. It's dark here, and I got to get ready for this show. All right. Hey, thanks for being here, and I will talk to you guys this evening. Have a good one.